Hey everybody, Preston Brent here with our Trader User Group Weekly Roundup. This is for the trading week ending April 1st, 2016, April Fool's Day. Man, what a rebound we've had off the February 11th lows. You can see here we had a very solid bullish divergence. I got our members in right here, and then we've had just a beautiful run here. We've seen also a weakness in the dollar, adding more bullish wins to the sales of commodities and things like that, primarily energy market and the gold market. Now, we've been able to play a lot of these to the upside from this big down move that we have here. But one of the things that I know a lot of traders are asking me, a lot of my members are asking me also, is just how high can this bounce go? Well, one of the things I found that was very interesting, and what I want to do is basically just kind of show you how this thing sets itself out. I want to just go back a little bit in time here. There were basically 3 times over the past couple of years that we've had a bounce like this. And let's go back to the first one. This was back in November of 2014. Now, if we look at this, you can see that we came all the way up to this level right here. Okay, we had a nice run. It was roughly about 263 points that we moved off of these lows down here. So you can see down off of this low right here, we had a really good run up. It was a little bit harder to catch. We didn't get the kind of signals that we normally get on these runs, but we had this good run here. But then what I want you to do now is pay attention to this pullback that we had here like that. You'll see that I have another array bar on there that shows the pullback was roughly about 118 points to the downside. Okay, and that was from this peak up of about 263 point run. So it was a really nice pullback that we had off of that. You know, and if you do the math and you take 118 off of the 263, and it's about a 44% pullback, almost half of that gain. Now, I want you to just remember this. And so this was the very first big run-up that we've had over the past few years. Now, what I want to do is show you the next one. If we come over, and I'm going to take these exact same bars, okay, just to kind of show you some parity and symmetry between them. I'm just going to move this bar. I'm not going to change the distance or anything. I'm just going to move it over here, and I'm going to show you that the next big run-up that we had from low to high was right in this area here, okay, right about there. And you can see that we almost, not quite, but in this run up here, you can see that we ran up to right there. Not quite what we got in November of 2014, but very, very close. Now look at the pullback that we had from that run up. If we look at that pullback, and let me just, I'm going to clean this screen up and I'm going to put this on here. You can see in parity to the pullback, again, really interesting because we were very, very close. So let me just draw the box in again for you. We had the move up like this. That was how far we actually moved. In comparison, just about 5 or 7 E-mini points higher. And then look at the pullback from here to here, almost exactly to the T, the prior pullback, almost exactly. Okay, so this is the second large move up that we've had in the past few years. Now let's go look at the next one, which is this one that we're currently under right now. Let me move the bar again. I'm not going to change the distance off the lows. I'm going to put them in right like this, and you're going to see here, really interesting. And then I'm going to look at what a potential pullback may look like, could look like. You can see here now we're again off of these lows, and let me just put the box in. That is the distance right there. And if you look at where we've gone and comparing them to the other 3, we're almost dead on exactly from a symmetry perspective, those last two big bounces, plus or minus 5 E-mini points. And both prior pullbacks were exactly within a couple of points of about 118 point pullback. And if you look at that here, where would that take us down to? Right around the 19, let's call it 1950 area. So this would be the third large bounce off the lows. Now, this prior bounce off the lows here, we also got long because we had these bullish divergence triggers setting in, and we've had nice runs in both of them. But now I believe that we're probably going to see a lot of weakness, or let's say soft or tired price action in the current price that we have here. Keep in mind that on April the 11th, which is about 10 days from now, we're going to kick off earnings unofficially with Alcoa. They're no longer in the Dow anymore, but that's been kind of the official kickoff for earnings season. So we're going to see that kick off. Now, I don't believe up in this area here we're going to have a lot of new long buyers committing money prior to going into earnings. The other thing out of the stats going into earnings, our forward PE ratio right now is around a 16. I'm not a big fundamentalist. I always follow price action, but I just want to give you guys some heads up. The average 12-month forward guidance PE ratio is around 14, so we're already 2 points higher than average, okay? And there's been about 115 companies so far reduce their forward guidance and their earnings expectations coming into this Q1 earnings season. So that's about 20% of the total S&P 500 that have reduced their guidance, which is about 10 percentage points higher than what we normally see in reduced guidance. It's for these reasons that I don't believe we're going to get much higher here. The only thing that can take us higher is very strong earnings, or more of Yellen speak, which is what we got this past week. Our Queen Mama drama, or drama mama, whichever way you want to say it, came out and basically was more dovish than hawkish, and we've got kind of a Goldilocks scenario right now with the markets. We've got low interest rates. We've got stimulus going on in Japan, China, and across Europe. We've got very low interest rates here, which pushes a lot of money into the equity markets. And I think eventually something is going to break here. Now, let me just clean my screen up, and let's go take a look at a couple of things. So this is a typical symmetry that I wanted to show you guys, because we can get this typical pullback. I would not be surprised at all. If we also look at the Dow Jones Transports, you remember they've led the way in 2015. They gave us about a 6-month heads up that the markets are peeling to the south. Now you can see the transports. We're still under the 2016 opening price, but we had we're moving fairly nicely. We had an update today, and as we moved into the I'm sorry, this was the let me get it up here, the Russell. I'm sorry, we're looking at the Russell. As we're looking at this, we've had a fairly strong price action on the Russell futures. Now this is small cap and mid cap, so this is another one that I'm watching. I want to see that we can regain this 200 EMA. We've got a lot of, as you can see right here, we've got a lot of overhead supply right here in volume, so it is going to be very difficult to get through here unless we can have a breakout to the upside with new long buyers post earnings in Q1. I suspect before that happens, we're probably going to get a pullback, okay? On that pullback, I want to see the 50 EMA hold up. As you can see, it's held up nicely here. I want to see it continue for the 50 EMA to hold. I mean, I'd like to see that. Now, if we look at this, you can see here that again, we're sandwiched between the 50 and the 200. However, not only has the E-mini S&P captured the 200 EMA. We're well north of the 50 EMA and the 200 EMA. We made new highs today, 2016 highs. As you can see, we were up to 2067. As we went into close, we had a nice strong finish to the close, which is all the more reason I do believe over the next couple of weeks we're going to trade in a sideways range until we get, starting to get some indications on the equity earnings period here for Q1. But the other one that I was just getting ready to do, I went into the Russell first, but is the Dow Jones Transports. Notice the transports have started moving down 2 weeks ago, and they've just slowly been going down just a little bit here. So that does concern me. It did hold up its 200 EMA, which is good. The transports, if we really back it out here, let me just back it out for you and I'll show you. You can see this downsloping trend line right here, really kicking off. And it started in 2015, and it was our first clue that 2015 is going to go south. But it really didn't happen till right in this area here that the equities finally gave it up. Remember, while the transports were going down like this, the equities in 2015 were slowly going up. But all the signals and the non-correlated assets and some of the correlated assets to the equities were going down. So now we want to watch signs for 90 days and 180 days out. We want to watch for clues on where we think the transports can go and what we can get off of that. So we've had this nice run in the transports. I'm expecting a little bit of a pullback here. I'd like to see the 200 EMA hold, but at a minimum, or at no more than falling below the 50 EMA. So that's kind of what I'm looking at in the transport. So these are a couple. The E-minis, the Russell, I want to see small caps start to participate more. The Russell was one of the least performing indexes today. The best performing index was the NASDAQ futures, the NASDAQ 100. You can see here, we're still in the red for NASDAQ for the year. You can see the 2016 open price. So we're still in the red, but we're well north of the 200 and the 50 EMA. So I want to watch and see where all of this takes itself. Now, one of the other areas that we're watching very closely here, and this one is in the Treasury market, bonds. I'm following bonds very closely here, folks. Bonds today actually finished up, which means interest rates are going down. Now, with interest rates going down and equities going up, that is not a normal correlation. One of these is going to have to break. I've been a perma bear in the bond market, but near term, if we get that rollover in equities, then bonds I think are going to come up and move a little bit higher here before they roll over again. The 2016 high for bonds is up around 170 and 26 ticks. I do believe that I don't think we're going to get that far north, but if we get a little bit of a healthy pullback, much like we got in that big rebound in November of 2014 or the rebound we got in August, late August, September of 2015, then we could get that little bit of a pullback here too. So these are the ones that I'm watching. The other thing that's been very interesting is the dollar. I've been telling our members here, look at the dollar here. I mean, this is, to me, this is really amazing. And if we come out here and we look at basically the beginning of the year of the US dollar, which puts us right in this area right here. So if we look at 2016, I'll scope in 2016 for you right here just so that you can see it. This is where we've been 2016 for the dollar. And you can see here that we are, scraping by on the lows for the year for the dollar. Now, remember, back here, Yellen's, we raised the interest rates, right? And then they had a dot plot, and the Feds came out and said, we're going to have 4 rate hikes for 2016. Lo and behold, they had the Shanghai meeting, and I'm a conspiracy theorist. I believe they had some kind of get together, and Yellen said, look, I know you guys you can't raise interest rates. You're cutting rates. You're weakening your currency there. And the dollar, though, I'm concerned because it's getting too strong, and our corporate earnings are going to continue to suffer. So I'm going to be a little bit soft. We're not going to do any stimulus because we're going in the opposite direction to everybody else, but I'm going to be a little bit soft and drive the dollar down. That's exactly what I believe has happened. So if you look at this, and now once we went from a rate hike over here in December to no rate hike here. Look at the dollar. Boom. Away we go. Just like that. I do believe it's going to find a bottom here. Janet Yellen is buying duration. What she's trying to do is delay strengthening the dollar short of the other currencies like the euro and the pound, the Aussie, the Canadian dollar, and the Australian dollar getting stronger. She is keeping the U.S. currency weaker than it should be, okay? And that has also put a really strong upward movement in the commodity market, the energy market, gold, everything. But I do believe we're about ready to find some support here. A little bit, it's going to start to firm up here, and I think we're going to get a little bit of a rounded action here, moving the dollar back up again. So that's a little bit about where I'm watching the dollar, because if we look at the euro, it's just the opposite right here. If we look at the euro, you can see here, and I'll box in just 2016 so you can see, where we've been right here, just like that right there. That is 2016, right, like that, right? We've just, it's just the opposite. The euro started at the bottom, and now we're up at the top. In fact, I've got to move the 2016 high up just a couple of pennies because we made new highs today, and then we closed near the highs. So the euro is doing one of these numbers. Now, Mario Draghi does not like that, okay? He needs a weaker euro because it's going to make it even harder for the Europeans and the ECB to do what they need to do. So I think he's going to talk up a weaker euro. He's going to roll the euro over. We're getting some bearish diversions here, so I would look at one of the things I'm going to be talking to our members about is, some possible trades in the euro, either with FXE or the British pound, which would be 6B, I believe, or I'm sorry, not the euro, rather. That's what we're going to be looking at probably into next week, because I can see a little bit of a firming up of the dollar and a little bit of weakness here. Because remember, there is no reason, if the Feds follow along with exactly what the U.S. economic data is saying, they're going to be forced to raise the rates. Otherwise, they're going to be behind the 8 ball on inflation. And I'm beginning to believe they may not even mind that. They may not even mind the U.S. economy running a bit hot for the near term, because they're trying to manage corporate earnings and a stronger dollar versus all the other currencies makes it very difficult. So I think that's what she's got on her mind right now. So that's where I'm watching in the currency market. And of course, if we look at gold, you can see here gold has had a great run. It is coming down to where I said it would come down to. And if we look at 2016 again, and I'll just box it in for you guys, you can see right here, this is the a typical 3, 4, 5 pattern. We'll get a 4 and then probably an Elliott Wave 5 somewhere up in here. I called for a support right in this area here, more of a support zone right in that area there, around the 1200 level. And I'm not getting any signs yet that it's time to take a trade to the upside. Now here we were trading gold. We entered gold at the lows of 2016, and we've done good for 2016. I mean, it looks like the euro. We've just been going straight up. We're having a little bit of profit taking here. But remember, as long as Yellen stays dovish, there's no signs of inflation, and the dollar stays relatively weak, we could get gold to move up. Now, if Yellen comes in and surprises people, or because we're going to have an FOMC meeting this month, and they say something about tightening and firming up, you're going to see the dollar or gold drop precipitously, and you're going to see the dollar get very strong. So just be aware of that. There's some monkeying going around, reindeer games being played by the central bank, so you just have to be very careful. And now let's look at oil, another one of my favorites. Oil had a really horrible day today, down about 1.71. It was one of the few days where we've seen oil perform very poorly to the downside and equities move strong to the upside. Keep in mind, yesterday and today, it's end of quarter, new day of the first quarter. There's a lot of jockeying for position. There's a lot of adjustments. There's a lot of rebalancing of portfolios. So I tend to discount some of this movement. But you can see oil, again, what I told our members, I see a little bit of a pullback in oil, but I don't see it going back too far. We've got, like gold, a typical 3, Elliott wave 3, possible 4, and a possible 5 pattern here before it starts to peter out. The big thing with oil, just like the equity markets, we had a beautiful signal here, and we got long oil down in this area here, and a lot of energy companies. And we've had a nice run. So now what I'm going to be doing is I'm not in oil. I maybe short-term trading oil inventory reports, but right now I'm just waiting to see if we can hold this 50 EMA here. We're kind of sandwiched between the 200 and the 50. If we can hold it and get some consolidation, then I get a trigger to the upside. That's the way I'll play oil right now. Okay, agriculture. Now, you guys know, and our members, you know, you're following me in the soybeans trade. We've made new highs in soybeans today. We're about max profits on our trade. I may do some more in soybeans. This is like our 4th time in and out in soybeans, and we've done really well. I like trading soybeans this year more so than corn. We've had a great move off this low here, and we got in here and we rode it up very nicely. So it's getting a little bit stretched up here. Would not be surprised to have a little bit of a pullback, and we'll be looking for another entry. Now, one other thing I want to show you guys that I'm following closely, that's volatility. If we look at volatility, let me just find it on the screen here. Here we go. If we look at volatility, notice on my chart here, I've got volatility, the VIX, divided in zones, right? I've got zone 5 through zone 1, and I'm just kind of showing you. Volatility is at the lowest it's been, going almost back to November of 2015, right? Very, very low. And that coincided with that August, September, October, November run that we had off the August lows, okay? So now we're in zone 1. What does that mean? Well, that means our strategies for options change as we get into different zones for volatility. So rather than doing credit spreads, I still do some of them, but I'm looking more for debit spreads. We're buying option premium rather than selling. On the volatility side, I may be looking at getting long some vol futures. I may be looking at getting long maybe VXX. We've had a nice run from this level here down on XIV, which goes the opposite direction of volatility. So there's going to be, I think, some interesting trades coming up, okay? Just know that we're very low in vol right now. The VIX finished at 1310. It shows a little bit of complacency in the market. Like I said, we do have a Goldilocks market right now with low interest rates, stimulus all over the world but the U.S., and a very dovish Fed committed to letting our economy run a little bit hot. So, but that does create asset bubbles, and I do believe we're going to get a little bit of a pullback. You know, you never know when, but I'm looking for it. Now, that doesn't mean I'm not long. We've had some great long trades, so I'm a reluctant bull, but I'm waiting for a pullback here, and we're going to play it to the downside when we get it. All right, everybody, I hope you've enjoyed our session. For our members, I'll see you tomorrow or Sunday night for our weekly market watch. And if you're a non-member, I highly encourage you to come in and check us out. We had a great 2015. We've done very well over the past few years, outperforming the index, actually since 2008. when I formed our group, our user group. And now in 2016 promises to be the same. I think the way 2016 is going to end is going to surprise some people, but we're going to be right there in the middle of it. All right, everybody, have a great weekend. If you're not a member, come on in and check us out. Otherwise, members, I'll see you Sunday night. Have a good one, everybody. Ciao.